Hi guys, welcome to the Savvy Money Show with me, your host Sean. If you find today's video informative, please hit the lovely like button. If you haven't subscribed already, please do. If you want to be a hero, hit the bell notification as well. So, what are negative interest rates and how will they affect the UK? I'm discussing this because the US are talking about whether to go negative interest rates or not. For the moment, they aren't, but they're still discussing it. Negative interest rates have a lot of positives and negatives. The positives are it gets people spending. During a time like this of high unemployment, people don't want to spend, they only want to save, and so they will keep dropping the interest rate. The UK central bank has already dropped it twice from 0.75 to 0.25 to 0.1 since March. Now, there have been other countries who have gone negative before, such as Sweden, Switzerland, Denmark, and even Japan. And the idea is, if the central bank, where all the banks keep their money in, goes negative, then the banks have to pay to keep their money there. And then they would much rather lend it out to people and get some little bit of interest in. And even if they're going to give them a mortgage, they would then put on other fees for setting up the mortgage. And it kind of gets people borrowing more, spending more. And even when it comes to investments, as you know, I like to invest. I invest in property and in stocks. I used my stocks to invest in my first property. And you'll get people possibly borrowing more to invest in a better property, or you would get people taking riskier investments, borrowing in riskier investments because it's not going to cost them so much. You may get people, once they go negative, going on to a fixed rate to tie themselves in to that rate for a long time, worried that as soon as they come back positive, the rate's going to start shooting up like before. To take myself for instance, when it went as the negative before, my mortgage, and I was on the tracker, my mortgage went down from £250 a month to £41 a month. I didn't go on to a fixed rate, and within a year or two it shot straight back up to £450 a month. So there's lessons to be learned from there. However, it's good in a way that it gets people spending, where usually people would just save, and it kickstarts the economy again. Look what happened with the Fed, where they printed up all those trillions of dollars. The Fed was actually reducing its debt before all this came, and its books was actually looking good. And now its books actually look terrible. You have a downside, of course. I don't know if you remember a certain African country that ended up with $1 trillion note because they printed so much money. Don't know if you remember in Germany before, where they printed so much money that you had to go and with a wheelbarrow of marks to buy a loaf of bread. And then the next week, where they carried on printing, you had to go with 2 wheelbarrows of money to buy a loaf of bread. You know, it's what happens is you end up with sorry about that. You end up with massive inflation. Things don't have the same value. Your money won't have the same value anymore because there's so much money in circulation. So the value of the pound or the dollar will lose its shine. I used to say how my parents used to give me £5 to go out and do a week's shopping, and I come back with change. Can't do that anymore. There's too many security cameras around. But seriously, a pound used to be worth. You used to be able to get so much more than you can now, and it's the same with the dollar. Same with every currency. Why? Because of inflation. Because they've printed so much over the years, and that's the way things go. Now, if it does go negative, then that would be the time to get a mortgage, search around for a mortgage. But at the same time, you have to, if you think they're going to go negative, I would do all your searching for a property before they go negative, because the housing prices will skyrocket because so many people will be buying it. And that's part of the reason they go negative. You know, the US and the UK, the US mainly, is on the edge of a housing crisis, and they know it. And the fact that they haven't massively reduced prices just make them all the more ready to collapse and fall sharply. But one way to prop them up would be negative interest rates. In the past, they've come out with Help to Buy schemes and all these other things, but this would get the economy started. It would prop up the housing market, and when all the experts say it's going to burst, you know, it's the Airbnb we've seen in America. The Airbnb market has just collapsed, and I wouldn't be surprised if that happened over here as well in the UK. But once that starts in the UK as well, you will see all the other markets collapse. So if they have any sense, that's what they'll do. So if you're kind of stable enough to get a property or get a mortgage, you might want to kind of look around in the area you want a property. You find your ideal property, then once you've found it, as soon as they go negative, you go and get your mortgage. What you do is you get an agreement in principle. You don't get your mortgage, you get an agreement in principle. You put in your offer straight away, and then if it's accepted, you do it that way. Alternatively, as I said, you might want to borrow for the stock market, because if it's negative, you might think, hold on, there are plenty of stable companies around. I mentioned before, there are plenty of undervalued companies which are given 5%. GlaxoSmithKline, Merck, Pfizer. You know, you could get a interest-only mortgage or part-and-part mortgage, and if it's negative, you could be paying back 2% a year and be earning 5% in dividends. And at the end of the term, you've still got the shares. Ideally, I wouldn't have an interest-only mortgage. I think it's the worst one to have. There are people who recommend it, saying you've got longer to pay it off, but in my opinion, so the only good thing about the interest-only is you can borrow more, because with a mortgage you can only borrow 3 times your earnings. Some companies will let you have 4 times just to get your business. Say for instance, I could borrow 150,000 on a repayment. It would be 200,000 or 250 on a interest only. Anyway, if you found this information helpful, don't forget to hit that like button, and if you haven't subscribed already, please hit the subscribe button, and I'll see you in the next video. Goodbye.